Hello everyone, good afternoon and welcome to today's Trading the US Open Live, and today is 11th of September. So just to touch upon what we'll do during the course of this session is look for high probability trading opportunities. We have a way in which we can identify high probability trades. So we're not just looking to be jumping in and out of the markets. We've got a coherent plan that we can look to follow in a very practical, meaningful pattern. And then we have a series of decisions to make regarding our ability to exit those, enter and exit those markets. So really focusing on execution, what that means for us. And then we enter the trade management phase, where we look to cut our losers short as quickly as possible. Today was a casing example, this morning's session during the British pound, so I'll explain to you that shortly. And then what we've seen is the necessity to manage those trades effectively, whether mitigating loss or booking in profit, and with that, a constant potential to let your winners run. So when you do get a really good positive trade, that you'll benefit accordingly from it. And everything we do is designed to generate consistent returns when we trade these markets. So without further ado, if we could start with our risk warning. Of course, just familiarize yourselves with the risks involved in trading these financial markets. So take a brief moment to familiarize yourself with the risk warning currently up on screen. Okay, so before we begin then, let's do a quick review of potential market moving news. There's a very important reason for that, is to align ourselves with potential volatility in this market. Now, the only major news we've had today was at 9:30. We had really positive data out of the UK, and it was concerning average earnings index. So we were expecting a 2.4%, and we've actually seen increased growth on average earnings to 2.6. So obviously that was a bit of a good news event. We had slightly negative employment data coming out, slightly larger than anticipated, but still unemployment is at a very low rate, 4%. And all in all, it was perceived, and it should have been a good news event. Now we'll have a look at the pound very, very shortly, because there is a couple of really important lessons for traders to learn from price action like we've seen today, which is a little bit on the unusual side, to be fair. We don't really see what we've seen this morning that often, but these markets are prone to these kinds of moves. So as we look through the rest of the afternoon, as you can see, we don't really have any significant news events that are of any major concern to us this afternoon. So and of course, outside of the news flow, of course, lives the geopolitical news threats that can obviously shake these markets: trade war tensions, sanctions with Iran, difficulties with global trade talks between China and the US, Brexit negotiations, issues in Europe. So there's a whole myriad of geopolitical events, more macro events, that can have a really strong impact. I suppose it's a good place to start here. I mean, look at the really strong rejection in the euro dollar, and actually the dollar has considerably strengthened as the European session has continued. Look at the complete rollover to the downside. Let me take you back to this bit of price action that we've seen. So in fact, I want to take you back to yesterday actually. We effectively saw a 100 pip move in a very, very short period of time yesterday off the back of Barnier. You could see this descending level and how this market responded to that. And then when we got the break of that level, we saw a really sharp move to the upside. And then the market sort of fell asleep and didn't do an awful lot. And we started to increase over the Asian session, started to push higher. And we were able to get into this trade this morning at a pretty good point actually. We got into it just before we were looking at this low in here, and this price providing a little bit of support, and we got in around the 30.54 level, I think was our entry price, just a few minutes before this significant burst to the upside. Now that actually wasn't a news event, that was just a bit of sort of activity, and again, no real significant reason for that activity. But what we subsequently saw is the market make a high at the 30.87 level, and then pull back slowly for the next sort of 40 minutes or so. And then when the news was released, we saw a really sort of a bit of an attempt to make a new high off the back of the news event in and around this price here. Sorry, it was in around here somewhere. So around the 30.61, and we saw a nice little move, a 20 pip move to the upside. Positive news event, expected to kick on to the upside, to be fair, break the 30.81, and on a daily time frame we are in a good position to obviously this market to start increasing in value. Of course, that's not what we saw. So what we saw was an incredible 1 minute devaluation of the best part of 100 pips, and now there's some increased volatility kicking in again. So look at the way this market is moving now, even as we're talking. So this market has a level of volatility that it's certainly making us feel a little bit uncomfortable. So we have a low around the 29.64, we have a high around the 30.40 level. So an 80 pip kind of swing in a very short period of time. It's just very erratic, isn't it? Those of you that were trading the pound this morning, we're seeing more erratic price action. Of course, we have US traders joining this market now, looking at this price action. It's not really committing to any major direction apart from the significant rollover to the downside. Oops. So we're seeing this little rollover, and it's just so choppy, isn't it? Let me see if there's any news events at 1:15 actually when we look at this. So there's Canadian housing starts. I'm sure that's not likely to impact the pound dollar in any way, but mildly negative news for the housing sector with Canada. So clearly there's some sort of erratic volatility flying up and flying down, and we've already had a big push lower. So we've made a new low, and now we seem to be sort of bouncing higher again. So really, we'll keep an eye on it on a daily time frame, but now this isn't... I mean, it's interesting to see that we got to bounce off this descending level, which can provide a little bit more support coming into pushing prices higher. But as long as we're below the 30.50 level, you'd have to expect continuation actually to the downside. Now tomorrow, this could give us a good opportunity to push these prices lower. So if we just sort of share that kind of bit of price action, we've got the potential for this market to squeeze lower, so it might give us a good opportunity. Today is just a complete rejection to the upside, and that's really how things stand. So it has moved from being quite a high probability trade to the upside to actually being a poor quality trade, full stop. So I suppose that is our understanding, and of course that can happen. But we subsequently seen a little bit of strength creeping back in to the dollar and the yen. Ironically, we'll come to the yen shortly, but the dollar is not giving up to the downside against the Swiss. We can see that the Canadian dollar had been selling off for much of the morning session, and we're seeing a bit of a reversal. So maybe we start seeing a green candlestick, but really the price action the last couple of days in the dollar CAD has not been great for us to work with. The Aussie dollar, we do like this market lower. If I look at this on the 5-minute chart, you can see we've had a new explosive new low in around the 70.86 level, and we have the weekly low around the 70.98. So really for us, an opportunity to the downside very well may exist. So it's worth keeping an eye on this market to see if some dollar strength comes into this market, what opportunities might present themselves. So it's worth having a look at this one. I think we'll work with the Aussie dollar as opposed to the New Zealand dollar, just because the range is often much slower and smaller. So we're likely to get a bit of a better move in the Aussie dollar. So we might stick with that for now. Moving on to the euro pound, you can see the messy price action that we're left with today. So So no major opportunity as things currently stand with a few of these markets. So just the nature of the rejection has been quite prolific. I'm assuming you would agree. Same situation with the pound yen, really strong reversal. If you can imagine, if this is a green candlestick above the 145.65, you're actually really expecting this market to continue higher. But of course, that is not the trade that we have been able to see and identify. So this market is coming off just off these highs, the 145.65 level. That's the pound yen. So moving on then to the gold market, we're seeing this market slowly, ever so slowly, just look like it's going to roll over to the downside. Now, to trade on an intraday basis, we'd like this market to break the weekly low, the 1189.62 level, just this level sitting in here, and we're a little bit above that. But if we got a flush lower, it would definitely become a high probability trade for us. Not much is going on in the US oil market just yet, so perhaps a little bit of patience is required with that one. Now, a couple of interesting developments in the US equities and the equity space, full stop really, as the latter part of the European session started to kick in. We started to see a bit of selling coming into the US equity markets. Now, this level is quite significant because it represents a weekly low as well. So we're now below the 25.805. So we do want to come back and have a look at this and see if we can capitalize on an opportunity to the downside. So does this, maybe even for the day, the S&P and the NASDAQ still have a little bit to go to break that weekly low. But we're obviously getting and potentially looking at that move having already occurred in the Dow Jones. So the NASDAQ is very close to that weekly low, and so too is the S&P 500. So when we look across to Europe, we can see that the UK, in the FTSE, it's looking like it's going to edge lower. Sorry, this is the... sorry, I thought I clicked on the FTSE market. This is still actually the NASDAQ, apologies. So the NASDAQ, we do want to break below the 73.88 level there on screen. And finally, the FTSE market, we were looking at this level below the 72.53, and we've now had a little break beneath that level. So we're just hanging around the 72.26. We would have expected a little bit more of a move during the movement that we've seen in the British pound, but because that has been sort of flying to the upside and to the downside, clearly a little bit more stability to the downside. So that's what we have in here, is the potential for this market to continue lower, which is why we're going to narrow the focus and just focus on this. So far, this is a double bottom, so a break above the 72.44 might actually be just pushing to the upside. So that's the FTSE 100. The EU, so this is the Euro Stoxx 50, it's just rolling over to the downside. Again, the high probability trade is actually below the low, below the 23.73 level. There's plenty of scope to the downside in this market. In fact, you could argue it's just marginally below just the level below it, the 33.62. A close below that level basically opens up an interesting set of opportunities. So the reason why we don't want to get into it now is purely off the back of the potential for some support coming into this market around the 32.63 level. So we can see that on the daily and also the weekly chart. So we've narrowed down our potential high probability trading opportunities for the session. So we're going to look at the FTSE 100. So we're getting a bit of a bounce off this double bottom, as we can see it in here. The other market we're going to look at is the S&P, so we'll have a look at that at the top right. So let's see how this is going, and I'll have a look at this in a bit more detail. So we'll go into these very shortly. They're both bouncing off the lows. We both like the idea of these trades pushing lower eventually. So the only other trades we've identified, and we are experiencing quite turbulent market conditions. We can have a look at the potential move in the Aussie dollar, and I think that just about effectively concludes. I want to keep a close eye on the pound dollar just to see what's happening with this market. So this is our trade plan. Effectively, we're looking to sell. If we start to see some continued dollar weakness in this market, then we're very likely to see this market continue rolling over to the downside. The US 30 market, again, we're currently below the weekly low. So these red lines on all of these charts, these three charts, all they increase the probability that this market is very likely to move to the downside unless we get what's called a rejection of this level, which would look something like this actually with the FTSE 100. If we got a break above this level, then we take our time obviously getting into this market to the upside. So that's what we're going to be looking for in the FTSE 100, to see if we get a structural failure. Obviously in that case there will be no trade to the downside. So we'll just keep monitoring this candlestick here and just monitoring these lows and see how this market performs. So I'll take this. Also, we'll monitor these lows here, and also take note of the high. And it might be the case that we've just extended lower, we're pulling back a little bit, and then we take the next leg to the downside. So we can still look at selling this market in and around that price. Same sort of situation for the UK 100, and the pound market we're just looking at just out of curiosity. The dollar, the Aussie dollar, should I say, is, if we just have a look at it on screen, so we've had the break to the downside in this market. We've largely been moving sideways for a prolonged period of time, and we're now pulling back off the lows. So these are a number of rejections to the downside. So we're just interested to see what happens with this market at these prices. So let me take these scribbles off the page. So what we're looking for is a potential for this market to squeeze lower, below the weekly low. Potentially look to sell this market, the Dow Jones, below the 2580 if possible, and we'd need to sort of look for the breakout to the downside as far as the FTSE 100 is concerned. So those are the trades we're going to look at. We will sort of look through the markets now very, very shortly. If you could just bear with me for 1 second, I shall be back to you very shortly indeed. So just bear with me a sec. Okay, apologies for that sort of little mini break there. So let's go into each of these three markets then, and we'll scrutinize them in a little bit more detail. So the Aussie dollar to the downside. I just want to have one more look at the gold market. It's looked like it's picking up a bit of momentum to the downside, which would be interesting for us. Nothing going on in the oil, and we're already looking at the US so the US 30, the UK 100, and we'll just keep an eye out of curiosity. Right, so we're looking at all of these three markets with regards to 15-minute time frames. So we have identified these looking at daily time frames. So we've conducted what's called a little bit of multi-time frame analysis. So we know that we're going with the market if we look to sell each of these three different markets currently up on screen. So I want to go into each one of these in a little bit more detail just so that you can see what's happened. So clearly we've had explosive moves between this range here of 71.27 to the upside and the 70.96 to the downside. So not a major move. We're talking about a 30 odd pip move between high and low since certainly yesterday late afternoon. So really we're in a sideways moving market. Now when we see these sideways moving markets, we're looking to see, do we get initially the run up to the downside, which you could argue, yes we do. So we get the run up, we get the explosive move, but then all of a sudden we get below the weekly level, which is the 70.96 or the 7100, and then the market reverses, which is not unusual. We'd obviously experienced that a lot. But then the next flush to the downside, we also get another slightly lower reversal of this market, and then we bounce back up inside, and we're currently inside that level. So now really we need to adopt a little bit more caution than our ability to get into these trades, just because we're looking at a 15-minute chart. Yes, we do still have a bearish biasness, but the price action hasn't ultimately conformed to exactly what we're looking for. So as a result, we are happy to keep a close eye on the Aussie dollar. And let's just look at the smaller time frames just so that we can see what's going on. So you can see how the picture begins to change when you look at these smaller. You can see a really strong pullback. So now this is a structural failure on a 1 minute time frame below this level, which could give us a good opportunity to get into this with a really tight. So I'm going to get into this market to the downside 0.1. So we've already calculated our potential entry in this market. So we've got slightly lower fill than I would have liked, but was looking to get into it around the 70.96. We're in 3 pips lower, so it's not the end of the world. But it's worth taking another look at this market, because we have a reasonable structural high up here at the 71.03, and we'll just put it in at the 71.05. So we want to, there's only like a 1 pip difference there in that trade, so we want it just above this level in here. Getting into it any time around now is absolutely fine. The 70.94, 70.95 area is absolutely fine. And we're getting just a bit of pullback off these lows as things stand. So, so what we've done is we've attempted to move lower. We've bounced back a little bit further than we would have liked, ideally, creating these little highs and these little structures in here. We've only got a sort of 11, 12 pip stop loss on this market. So again, we defined exactly what our risk is in this market, and it's a trade that we're looking to stay into the downside. So we've just probably, from an execution perspective, we've just got in a little bit lower than we would have liked. We would have liked to get in around the 70.96 level, but we're now in this trade and we have our stop loss just above this little level as things sit in here. So let's see if we get some moving markets. So we're currently in the Aussie dollar to the downside. So we'll keep a close eye on this market and see if we get this little rollover again to the downside. That would reinforce the sell trade actually to the downside, as long as we don't make new highs. So we'll wait and see on that one. So let's do the same analysis and see if we can get into the Dow Jones market. So we like the idea of this market beneath the weekly low. We'll just break it beneath these levels. So let's see if we get some continuation, or does this market do what it's done a lot over the last week or so, is pull back quite considerably. But there's a decent amount of momentum to the downside as we look across the US equity story. So we're looking to trade in line with that, and that's what we mean about the execution. Can you get your ducks in a row? Can you get the conditions setting up in a coherent manner? And if so, it definitely makes trading these markets a little bit easier. But if we look at the 15-minute time frame, it's okay. There's a biasness to the downside, but let's do like we did with the Aussie dollar. Let's see what's happening. So there's the potential for a structural failure back to the upside. As you can see, so if this market breaks above and closes above the 25,786, then it might mean there's a reluctancy for this market to push lower over the shorter term. So we're in this kind of sideways moving phase, as you can see, for the last few hours. So really wanting to see if we get a strong break to the upside or to the downside. I'm just conscious of the time as well. So in the next 50 minutes will be the open of the New York Stock Exchange. So you're likely to get an influx of capital into this market, and you're likely to see these markets moving higher or lower, depending on the what the big institutions are looking to do with this market. This is the US 30. So we can exercise a little bit of patience with this market as things stand. We do want this market to continue to flush lower. So anyone that wants to get into this market around this price point can actually go ahead and do so. It still stacks up. So a little bit of a pullback, and again, the defining point for this particular market is actually the 25,786 level to the upside. The dollar is continuing to strengthen a little bit against the pound. The other thing we have going for us as well is there's a lot of resistance. So we've got the weekly low that can provide resistance to the upside. So again, any trade in and around this price is probably worth taking. Now the target, of course, is for this market to break the 70.86 level, and hopefully we do get that break and we get that continuation to the downside, which has been which we've not seen a huge amount of. One or two trades over the last few days, so definitely a little bit on the choppier side, these markets, but it does show the importance of being really accurate with your risk management approach as well. And the final market was the FTSE. So unless we get another attempt and we get this little roll over to the downside, we're currently above the 72.26. So we need to wait for this market to break below that level before we can get into it. So let's see if this continuation continues below. It's looking like we're gonna squeeze lower, but then of course we do need to break below the 70.86 to the downside as well. So happy to be in the Aussie dollar. and hopefully we'll get some continuation to the downside in today's trading. Nothing really to go on just yet regarding the Dow Jones. So what we're looking to do is to capitalize maybe on a break beneath this level. We can actually probably look at, in fact we can actually look at a stop loss in and around this sort of price here. So that would be around a 2% risk for this market, so that would be okay. We're currently in the Aussie dollar to the downside. Really strong rejection on the British pound, but obviously it's looking right now that you'd prefer to be selling this market and obviously looking to buy it. And again, for the FTSE 100, we're looking for this market to continue lower. And if that's the case, if we do get this little bit of a rollover to the downside, we could use this high here as a stop loss, or maybe this one over here. So we've got a couple of options. So we just need the market conditions to just conform to what we're looking to see happen. And if that's the case, we'll look to get into these markets. There's definitely feeling like there's a little bit more volatility, but we don't really want to experience the volatility we did this morning, which was excessive. It was a 100 pip move in 1 minute. And we saw that in the pound dollar and the pound yen. So that is volatility that makes us feel very uncomfortable. Whereas we normally like a reasonable amount of volatility in these markets. So quite happy to simply look at these trades and manage this. So now we enter the trade management phase. So now we're looking for opportunities to mitigate risk if we possibly can, and see if we get this price extending lower. So that's what we're looking to do regarding the Aussie dollar. And we've got a bit of time. We can give these trades a little bit of room. Let's look at this one on a 5-minute chart. So this is the kind of level that we're looking at on a 5-minute chart. So let's see if we get that follow through. So we're getting a nice little move lower as things stand in the Aussie dollar. So we really want to break that 70.86, and there shouldn't be any reason why that particular price would be looking to support this market. But of course we can only trade what we see. Okay, so so let's see how these trades start to unfold. If you do have any questions about anything that we've covered in terms of trade identification, how do we select the trades we trade? Perhaps how do we go about executing trades with a certain degree of consistency in our approach? And once we're in the trade, how do we then go about managing that trade? So we're managing the risk accordingly, depending on the market conditions. We're looking to trade structures, and if the market moves in our favor, we're looking to let the winners run. That's a very important principle to trading intraday markets. And if we get those opportunities, we're gonna look to ride them and mitigate risk. So firstly, we know there's going to be a pullback in this market. We'd like it to extend below the 70.86 and then sort of experience a bit of a pullback. But wherever this market pulls back to, and then we get the next extension lower, that can become a natural place for us to reduce our risk on the trade. So objective number one for us is to become risk-free if we can in the trade as quickly as we can, but not being too tight with price, and and the next step would then be to focus exclusively on our ability to trade structures and really benefit from an explosive move if we get them. So so I'm looking at the pound dollar. So there's a complete rejection of these highs. So really turbulent price action there in the pound dollar. Very interesting market to look at. So these are our three trades. Of course, we're looking for this market to really break below the 70.86, and we keep a close eye. We're not too far away for the Dow Jones, and also not too far away for the UK 100 level as well. Okay, so I'm quite happy to just monitor these trades. Again, guys, I hope you don't mind, but if you could just give me 1 to 2 minutes, I'll be back to you very, very shortly as we continue to monitor these trades up on screen. So I'll be with you in just a moment. Okay, apologies for that sort of swift break. So as we look at these markets, what we're seeing is kind of a natural pullback in the Aussie dollar, which is fine. It's kind of what we'd want to see. But now we need to see the follow through. So we need to see these levels break these lows. And if so, we're likely to see continuation to the downside. And if not, then it just means that the chances of a successful outcome are going to be a little bit reduced. So we can still get this market bouncing back to the 70.98, and we've got the 7100 in there as well. So we've got a bit of protection in terms of our stop loss. So we're seeing this market move now as we speak. Let me take this off and let's have a look at this in a bit more detail. So we're getting quite close to a potential breakout. Because there's plenty of scope in this market. If we do get this little break here, there's plenty of scope to capitalize on a nice move lower. There's no reason why not. And this is a level that's been supported now over the last couple of weeks. Previous level of resistance now becomes support, and we've got a break of that support to the downside. So it does represent an interesting opportunity, one worth focusing on, but only if we can get that sort of high probability entry into this market. So we might need to be a little bit patient for now, just wait for that premium opportunity and not necessarily preempt the move to the downside. Okay, so we're obviously getting a little bit of sideways moving price action with regards to the Dow Jones and the UK 100. Okay, so we don't have any other sort of significant news really. Okay, so we're getting close actually now to that little breakout move that we were looking for. So let's see if we're actually going to get that little impulse lower. So we just need to see if we clear these levels. So we just want to see a close of this market just below the 25,757 level, and if so, we'll look to get into this market if we just close below this level somewhere. So this is just consistent rules with regards to execution. Again, we're strong advocates of being consistent in your approach, and have a kind of a methodology and a way for you to get into these markets consistently. So what we wait for now is a close below this level, below this line. It's just previous closes. As you can see, the market's failed to close below that level. So if it keeps flushing lower and pulling back, then it's actually telling us that that there's some support coming in around these prices. So do bear that in mind. So like we're seeing a little bit of this market is really struggling to close below that level. So it looks like we're just going to have to be a little bit patient, it seems, with this market. We were willing and able to get in below the 25,757 level, and now we're kind of pulling back, and I'm assuming we're going to get the next flush lower. We're not really getting follow through as far as the FTSE 100 is concerned, and we're currently in profit. If we get a break of the 70.88 level, just move forward a few pips, we can probably take all the risk off the table with the Aussie dollar trade. So we might do that before we pack up this session if we get a little bit of a move. We'll have to come back to the to this trade. We've kind of got a triple bottom here, which is what you can see. So again, that just puts a little question mark in our mind. And if we attack this again with a certain degree of sort of volume behind it, it might be worth getting in below the 25.757 level. The pound is pulling back a little bit off the lows, as you can see in the pound dollar. We've got a strong pullback in the FTSE 100, so nothing really stacks up there for us. So we're currently only in the Aussie dollar. We are sort of lower, we're in a bit of profit, but we really want to kind of run this trade below the weekly low to 78.98, and we'll have to, it remains to be seen whether we're going to get that opportunity to do that or not. We definitely will have to wait and see. Not an awful lot of really high probability trades elsewhere, to be fair, just yet. Things might change. So just to do a sort of a quick review, really choppy, horrible price action there in the pound, in the Aussie dollar, also in the pound dollar. And to just retrace a little bit, this candlestick is fine if you're looking to sell it. So tomorrow we might get a break beneath the low, we might be underneath this level, and we might be somewhere down at the 129.30 level, and it could give us a fantastic opportunity to sell it down to the 28.08. So there's no doubt about it. This rejection is a firmly held belief that this market is not going to push any higher, and it's a complete rejection to the upside. So it might give us an opportunity tomorrow, but just potentially not today. Not much happening in the dollar yen. The dollar Swiss is attempting to retrace a little bit of yesterday's move, but again, nothing really happening over the course of the day. Same with the dollar CAD. The Aussie dollar, we do anticipate this market to continue lower. We just need to, I think, just be a little bit patient with it. And hopefully we'll get a good trade out of this market. The New Zealand dollar, we've decided to trade the Aussie dollar rather than the New Zealand, just because we're likely to get a bit more of a move out of the Aussie dollar. The euro pound is just bouncing back off the lows. So again, a pretty choppy market, really difficult to get a handle on it. The euro yen and pound yen, just awful price action really to try and trade. Now the gold market is getting very close to this break, so we're going to add this to our list, and we're going to keep a close eye on the gold market. So this is the really strong run up we were looking for. Now we're currently below this level, so now this is the new level that we want this market to break. So we're currently experiencing a bit of a pullback. So if we get a turnaround signal to the downside for the gold market, then we'll be looking to sell this market, ideally at these kinds of levels. Just very quickly, oil, nothing really happening there, and potentially more movement to the downside, although we've clearly got a triple bottom there on a small time frame. So maybe just give that a little bit more time. And the FTSE 100 is hanging around as well, so not really getting to see the follow through that we would like. Maybe the Euro Stoxx 50, we might see breaking below the 32.62. So we've definitely got a few trades today in the pipeline, which we're hopefully going to be able to manage effectively, and we'll see how we get on with those trades. So I'm just going to add in the gold market. We'll just have a look at this in bottom left. So we're just breaking higher as things stand. So we're pulling away from this quite strong move. So we're getting a pullback in that. So let's see how long that lasts for. We'll continue to manage this when we switch across to the live trade room now. So guys, we do have traders over at the live trade room waiting for us. So I do need to switch across. Please do have a look at the information below this link. If you do want to join us, we We conduct over 76 live webinars every day, so please do feel free to join us for those if you possibly can. And you get 2 weeks free access. And then if you decide to join us, all we charge for access to that is $9.99 per calendar month. So hopefully you'll have a really good, strong foundation in trading the financial markets without having to pay significant fees to do so. So do click on the link below and you get instant access to us. So we hope you'll be able to join us in due course. And we'll keep a close eye on some of these markets and see. Certainly we're going to add the gold market to our list of potential trades. And we're getting a bit of a strong bounce back on that market as we speak. So this could be a good time to really switch across to the live trade rooms. So what we're going to do is we'll wrap it up here, guys. And if you would like to join us, do feel free to do so over at the live trade room. Details are before. And please do give a thumbs up and do like this video and subscribe to the channel if you can. We are available live online through our YouTube channel between 8 a.m. For the European session and the first part of the US session as well. So hopefully you find it useful. You can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you very much for joining us. We are switching over to the live trade room right now, so do click the link below if you are interested in accessing a 14-day free trial to join us. And we'll speak to you soon. So from everyone here, take care. Bye for now.